So guys, how are you doing? In this video I'm going to be analyzing the pair USDCAD, and yeah, let's start right away. So like always, we begin from higher time frame just to see the overall trend of the market. You can use the daily, you can use the weekly, but just for a clear direction of where the market is going, these higher time frames speak volumes. So if you just have a glance from the weekly, you can see that we were heading up. USCAD actually is in an uptrend. It was going up like this. It was going up. However, it means it somehow has lost momentum, and just a general thing, it's just consolidating within these two zones right here. USCAD is just consolidating within these two zones. I think for the past maybe like 1 year or so, it has failed to break above this upper zone and also failed to break below this resistance, this support zone. So basically we could just give us an idea that this market may just go up and then come back to retest this zone again. So this is just a clue of what the higher time frame is saying. So from the weekly, we at least know that the market has finally rejected from the upper zone and is trying to seek the lower zone. So that's all we just need to know. It's a downtrend. We're going down. What about what's the daily time frame saying? So the same thing in the daily time frame. In the daily time frame, we are seeing recently all these previous days we've been trading bearish. So also we need to just find best areas for us to be able to sell this market. And now when we look at the daily time frame, actually right now we can see that the market has reached a supply zone. This is a very good supply zone right here. Market has retraced back into the supply zone, and in the next days we could probably even find opportunities to just keep selling this market to the downside. So the daily is going down, the weekly is going down. So far so all good. These bigger time frames are telling us the same story. We're supposed to go down. So even H4 should be speaking the same language. So what is H4 saying? To refine these entries even more, you can just mark that as our supply zone. We take that final candlestick. Yeah. So for aggressive traders, like I said, once the market comes back into the zone, you can take your trades and then capitalize that first initial downward movement, because every time a fresh supply zone or a fresh demand zone is approached, the market is going to make a rejection at least before it violates it, unless it's something like news or something. But usually 95% of the time the market will come and make a slight rejection, and then you capitalize from that. But if you're a conservative trader, when the market reaches your zone, you want to see it align in the direction of where you want to trade it to trade towards. For example, right now we're in a downtrend. So what you would be willing to see in a smaller time frame is, as the market comes back into your supply zone, you want to see a change of character or a break of structure, and then you capitalize onto the second move right here. Yes, you want to capitalize in this second leg where the structure has already now aligned with what your higher time frame is saying. So you wait for a break of structure or a change in character, and then you take your trades. So that's the thing I always look out for. So this supply zone we saw in daily, we just refined it here in H4. The same thing. Now market has hit our supply area in H4. You can now just go onto your lower time frame to see a change of character, or what other people call it a break of structure, and then you see if we can find sell opportunities. So yeah, this actually there's already price action going on, but we're here to see our entries. So this is what happened when price reached our supply zone. H4 supply zone, this what you're seeing right here, this is just the price action taking place within the supply zone. So the price came and it finally broke structure. Price came, made a slight rejection to the downside, and then what do you see? It went back up and probably took out people who, those early sellers who had put their stop loss just above here. So price went and took them out, liquidated their, took out their profits, their stop losses. And then what happened? The next thing that happened is this market now started pushing to the down, to the downside aggressively, and even caused a break of structure, just like that. So it caused a break of structure. So once we see a break of structure, what we do is we identify our supply zone that is responsible for this break of structure, or what people call a change of character. For the first one, a change of character. So our supply zone is this last bullish candlestick. So we mark it out and then we wait for price to come back into this zone before we can take a trade. So right now all this is happening, but all this is noise. This is what's happening is the market is generating liquidity. There are people now who think the market has left them. They are entering from these positions and putting their stop loss just above here. Others, when they see these moves going down, they're going to place their stop loss just above this zone. So even right now, you see this break of structure. Someone enters from here, then puts his stop loss above this zone. So what the market is doing is just creating liquidity. All those impatient traders are entering this market and putting their stop loss just above these highs, not knowing that these are not really this is not really the true high to be putting your stop loss. So the stop loss has to be above this zone, this supply zone. So a disciplined trader is out waiting for this market to finally come back to this zone, Sorry about the internet connection. It's going to come back on. So a disciplined trader is waiting for the market to come in that zone and then sell off from that zone. So that would be the safest way to play with this market. So, and this is something I'm also looking out for personally. So I'm out, but I'm not afraid. I've set my limits, my sell limits already, and I'm waiting for this market to come way up here, then I can take the trade. So the best entries are going to be up here. This is what the best entries will be, and then the stop loss just a few pips. So if you see that's already about 12 pips or 12 pips stop loss to cater for liquidity swaps, to enter for the spreads and maybe liquidity sweeps above the zones. So, and the other way someone can do is, if someone just enters here, literally he has to make sure that his stop loss is above there, something like nearly 40 pips. But if you're patient enough in the market and just let the market come to you, then yes, you can wait until the market hits the demand, the supply zone, and then you take it from there. Then where else are we going to take this market from? We're going to take it the most recent low. And what is the most recent low? The higher time frame is telling us that the market is going down. The market is going down. So it means you can even hold this trade. It's more like a swing trade. It has the potential to go way down. If you look at the daily, if you look at the daily, we saw that this market has the potential to come up to this marked zone down here. So it has the potential to come up to the zone down there we've marked. So if we're really patient, we can even hold this trade up to that zone. Yes, it's very possible. Of course, we don't really rule the market, but at least that's what the higher time frames are telling us. We can just even hold this, we can hold out this trade until it goes away. But the key thing is we just have to wait it out, and this is what I'm waiting out already, and I believe it's going to be a beautiful trade. So I'm waiting out for this market, and to not just exaggerate it, I'll just target the most recent low, or even target this lower liquidity here, this lower liquidity resting below here. Most people think this is what a triple bottom, but what that is, it's all liquidity. So if I do this, I'll get something like a nice 1:6, which is very good. For every $1,000 I lose, I'm going to get 3,600 in return. But the overall take profit based on the market structure, it will be the previous low, which is right here. So this will be a realistic take profit. So it's like 1 to 13 risk reward. So that's what I'm waiting out for. Hopefully you've learned something. See you in the next video. Master. Maliriza.